Hey, this video chart will be on the gold sector. We're going to use the GLD to track that, and we're going to look at the weekly time frame. So real quick, obviously gold is trading for more than $118 an ounce. The GLD is just one of the many ways you can trade gold. So the exact price is not what is important, but the movements and trends and all that stuff is what is important. So that's the key thing right now. And I know it's the middle of the week, but the weekly chart is the only thing that we could do in order to go back and find where some potential bounce spots and so forth are. So if you're long, this is not a good situation of having to scrunch up the chart like this on the weekly, no less. Weekly, what that means is instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 1 week's worth of price action. So looking down here at the x-axis, you can see way back here is 2010, so we're looking at a vast amount of time. But after today, gold was down just today alone 4.2%. So it was brutal to say the least. But like I said, I want to map out some potential bounce points. I've been getting some questions saying, "Hey, why don't you do just overall sector?" So here we are, and I should say. I'm not short or long or anything, but I would like to see this chart just continue to fall apart. I'm a big believer in a strong currency for the health of an economy. So the more this falls, the more the U.S. dollar is going to rise. So while I'm not short or anything like that, I am probably biased and just I want to see this continue to fall and fall. So while I'll call these bounce points or supports, me personally, I hope they just crash through these areas. But hey, if you're long or whatever, you want to try to play some bounces, these are the areas to keep an eye on. So I think, yeah, right here was a previous level of support that was simply from these highs way back here in June of 2010, so literally 3 years ago. Those have fallen, therefore they are now levels of resistance. And then another key level of support that I believe today was broken, sure was this previous high from back here. Let's see, the date of this was the week of November 30th, 2009. So this, we're going way back into history. As you can see, this was a level of support going into today, but has since been broken. Now, one thing to note is this is a weekly chart, so there's still 2 more days for the price to close above this, which would then turn it into a support. But for the time being, as of the close Wednesday, it is a level of resistance. But again, because these are the weekly time frame, there is still 2 more days to form, I'm looking for the word there, form this candle into something different. This is not going to be the final form of the candle because again there's 2 more days, but for the time being this is still a level of resistance. Now for some potential bounce spots, first one that looks like the price will be heading down to test is going to be down here. This level is right down there around the 113 level, so right around 1100 or so per ounce. Whoops, that should be green because it's a level of support. And that's just looking at a low from back here in July of 2010. And then after that, if that level doesn't hold, then another potential bounce area is going to be actually below 1100, which would be crazy because when you're below 1100, you're actually starting to talk about could gold be going down below $1,000 an ounce, which obviously has not been seen for a very long time. But one step at a time. These are going to be the 2 levels of resistance, like I said, and these are the potential bounce spots. But if this collapse just keeps on going, then it would not shock me at all. And I want to see these levels get tested and fail. But we'll have to see what happens. You got to put your emotions aside and personal biases aside and just play the chart. But for the time being, things are getting pretty brutal here, so we'll see just how far this pullback goes. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to sign up for a newsletter up there, which is free, and when you do that, you will receive a free ebook. If you enjoy the video and want to learn more about charting and how to use it in your strategy as a trader, I'd encourage you to click down below and look at our educational course. Over 8.5 hours of video and teaching. It's been getting great third-party reviews, so I'd encourage you to make an investment into your education as a trader and check it out. One more time, this was the gold sector via GLD. Thanks for listening.